Is there a specific mutual fund that will fetch you higher returns during a market high? Financial expert Mr. Sandeep will enlighten you now.
I'll give you a two answer to it. So when the markets are high, so even if you invest, so today only we have released a note in our weekend bites where we have said that today the markets are running at all-time high levels. If you invest now also for a period of 5 years, there is a 95% chance you would have earned a positive return. There is only 5% chance you would have earned a negative return. And above that, this is I'm talking about Nifty 50. And to that, if you also look at if you have invested in the highs, the chances of having a return which is more than 10% is closer to about 50%. So now I'll just break this statement into a few parts for understanding. So typically what happens is we have said earlier that the stock markets are the slaves of the earnings. And today, the earnings and the stock market returns are similar. If the earnings have grown, the stock market have also grown. And what is happening is, say, for example, the future returns would be predominantly being determined by the earnings which will come into place. But when you are investing into a market, then probably highs does not make any difference. If you are investing for a long period of time, you will be able to make some money. But when you invest into an expensive market, your returns are subnormal. When you are entering into a market which is cheap or lower than the average valuation, you tend to make a supernormal profit. So today, if you are entering into a market, your return expectation should be about say 10, 12 to 13% kind of a return, which is in line with the earning estimates. Having said that, the second answer could be probably we don't know where the markets are being headed, and we also want to participate in the market. Then hybrid kind of products are also very suitable. So what hybrid products does is it does two things for you. One, it automatically rebalances your portfolio. Say, for example, if the markets become expensive, it will reduce the equity allocation and it will increase the debt allocation. I'll give you an example. Say, for example, um, in the month of March 2020, markets fell by almost about 25%. And there was a product in the market which was having about 80% allocation in February. And in March end also, it maintained an 80% allocation. What does it mean was, just imagine that if the market has fallen by 25%, the equity allocation would have also fallen by 25%. But if we are maintaining the equity allocation at 85%, is which means we are buying more number of units. So when the markets are low, the fund buys more number of units, and when the markets are high, uh, they reduce the equity allocation, and the counterbalancing figure is the debt product. So hybrid products are also a interesting kind of products which can be looked at when the markets are high.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also, you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.